Hey, my name is Tucker Krause, and welcome back to my channel, and today's video, I got another quick news update for you guys. So, let's get right into it without wasting any time, because once again, kind of a short news week, though. Next week, it should be exciting with those CPI numbers. But that doesn't mean skip this video. Still have some stuff to cover, stuff you could have missed. First up, nuclear's been included in the EU Taxonomy. So, this shows more politicians are coming over the side of nuclear power and will also enable substantial investment into the nuclear sector without a massive weighting. Since, of course, the sector is so small, the uranium and nuclear sector. So, even if they only start pushing, Europe only starts putting in a tiny amount of their green energy money into nuclear, it's gonna boost the industry a whole lot. Since I've read, I think the uranium industry is about $40 billion in market cap, though I wouldn't be surprised if it's lower now, like 30 or 20. I'm not sure on the exact numbers. Alright, so, a seemingly strong jobs report. So, the headline numbers that came out for the jobs report, this week were actually quite strong. We can see here from Macro. Great follow on Twitter if you're not following him already. Go give him a follow. So, let's start from the figures. We added 372k jobs versus 265k expected, which is 107k to the upside. So that's, of course, really good. But, as he says here, well, and of course, we also got a negative 74k revision for US jobs added in the prior 2 months. And I should note, this is in June, so that's for May and April. So net, that's only 33k added over the 3 months. What's even more interesting is the labor force shrank, which we see right here. The labor force shrank by 350,000 people, which means the number of people in the US actively working or looking for a job became smaller. It's also reduced important metrics like the participation rate and the employment population ratio. The Great Resignation people aren't coming back, and we can see it right here. Still not as high as it was pre-COVID, though we can see even then it's not anymore on an upward trajectory. We've started to flatline or even trend down ever so slightly. And so, of course, go read this whole thread. I think it has a lot of informative things. These are just the two, parts of the thread I thought were the best to look at. Just for, the quick news, he provides a lot more, macro talk. Anyways, though, let's keep going. This is more on the jobs report. This is a chart from Zero Hedge here. We can see multiple job holders, both primary and secondary job is full-time. We can see that number is, crazy high. So, of course, that's another thing that's, showing that this jobs report, not good. We can see this here goes back to 2000. And would you look at that? Looks like it's a record high. Might just be barely beat here. Alright, so consumer credit reports show the rate hike impacts are beginning. So total consumer credit rose by $22.3 billion compared to March's record of $47.5 billion, which is right here. And I should note this is for May, so March, April, May. And so this isn't, consumer credits falling. This is where it's falling, is in the red here, but this is showing that it's not growing as fast, and so that's because, as we can see here, credit card usage growth is collapsing. We can see the drop-off is a lot steeper, and so rising by 7.4 billion compared to March's record 25.9 billion. So, of course, it's still growing, but, these rate hikes, because coming out of COVID, people had to start using the credit card like crazy because of the high inflation. That's all people could do to, survive it. And now, the rate hikes, while gas prices and things like that are still really expensive, those rate hikes are now making it more difficult to use a credit card, just making everything worse. And so that's, we gotta watch and see if this comes into the red. But that's very possible considering we're already seeing, quarter two GDP estimates come to be negative, and the first quarter GDP was negative. So we'll have to keep watching this. And to keep moving to non-revolving credit growth is in line with 2021 average. This didn't drop off as much, so that, of course, is showing that, credit card use, so that means, consumer spending, which is 70% of GDP, if I remember correctly, all that's, gonna start falling, of course, which is not good at all. Anyways, though, I don't really have anything else to cover in this video. Those are just 3 quick stories I thought I'd share with you in case you missed them during the week. Though, of course, either way, this is not financial advice. Do your own research. So, subscribe if you're not already. It's free. Helps out the channel a whole lot. Thanks for watching, and I will see you next time.